Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have back the CEO, Jeff Kendrick from Cematrix Corp. Cematrix trades on the TSX Venture Exchange under the symbol CVX, and it also trades on the OTC under CTXXF. The company is currently trading at 32 cents with about 135 million shares outstanding, or about a $43 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Jeff, great to have you back. It's been a long time since we last spoke.
Well, thank you for having me back, Paul. It's a pleasure to be here as well.
Perfect. An exciting time too, because I think you just come off your, one of the biggest quarters you've ever had. A highly profitable quarter, lots of good stuff to talk about. So we caught you at a good time, and we'd love to know more about that. Before we actually get into that, though, Jeff, why don't we go through a sort of a bit of a refresher, or maybe explain to us all, especially the newbies here, what Cematrix is all about?
Well, why don't I do that? And as part of that, I'll bring up my our deck presentation, but only go through part of that. I'll just cover sort of the applications. But as I bring that up, I'll sort of explain to the audience what we do, we're in the business of cellular concrete. And cellular concrete is a construction material that's used mainly in the infrastructure construction business all over North America. So we basically pour projects from Alaska to Florida and anywhere in between. And this product is essentially a super lightweight concrete, where we take all of the sand and gravel out of a regular ready-mix product. We replace it with a carefully constituted air bubble system. It's a microscopic air bubble system. By doing that, we create a lightweight material, a very lightweight insulating material that has some structural properties. So it has tremendous benefits over the products that we replace. We do not replace regular concrete, so we're not competing against the concrete or cement companies. We replace things like rigid installations, EPS block, which are large styrofoam blocks that they use in various applications. We replace other lightweight aggregates, gravel, dirt, weak and unstable soils. There are many, many things that we replace, but those are the major ones. Usually when you have a product that has so many benefits over the legacy products we replace, including being more environmentally friendly, generally these products are more expensive. But in almost all applications, our product is lower in installed cost than the product that we're replacing. So not only are you getting all of the benefits and advantages over this product, but you're also getting at a lower cost and a faster construction schedule. So sometimes we can be, if a project would normally take 100 days, we can do this installation in 10 days. So it's saving a tremendous amount of construction time as well. So just to give you an idea, there's millions of applications, but I'd like to go over just the large ones, Paul, and these are in no particular order, but tunnel grouting is one of the big applications for Cematrix. Essentially, in all of the older cities and even the newer ones, all of the infrastructure is being put in underneath the cities. In order to do that, they basically dig a tunnel using a mole, or what's called a mole, which is basically a big drilling head. And then they place their carrier pipes inside. So whether it's water or sewer or a combination, and they run those pipes inside the tunnel, and then we grout around them. So these are big applications for us right across North America. In fact, our biggest job ever awarded to us, which is about $32 million Canadian, which will start next year, is a tunnel project. Another big application is engineered backfill of bridge abutments, overpass abutments, and these MSE panels. So these large concrete panels you see along freeways and highways. and that basically build up the ramp for those bridges and overpasses that they cross over. So cellular concrete is the best material to use in this type of application, particularly if it's going over lightweight or light, weak and unstable soils, that is. And generally, most bridges and overpasses, unless they're going across another highway, are going over rivers and lakes and swamps and things like that that have very weak and unstable soils. It's a very good solution for that particular application, largely because cellular concrete is lighter than water. So it floats over these weak and unstable soils. So anytime you need to, again, prevent the sinking of those by other types of materials like gravel or other materials, they will use a cellular concrete material as a replacement. Highways and runways, anytime you're building highways or roads or runways over weak and unstable soils, or frost-prone or seismic-prone soils, cellular concrete provides a floating base over those weak and unstable soils, creating a long-term solution that's better than the legacy products that we replace. Just quickly, abandonments and annular fills, or anywhere where you're abandoning culverts or pipelines or anything, cellular concrete is one of the best materials to use in this type of application. And it's largely because the air bubbles in our material act like frictionless ball bearings. So we're able to pump under low pressure, long distances from one location in large volumes. So it saves significant amount of time, significant amount of cost when you're placing this material versus a traditional grout, for example. And then finally, this is another big application, is insulation and flowable fills. So in this particular instance, this is a large industrial site that was built in northern Alberta. The entire site was covered with cellular concrete as an insulating subbase for all of their facilities, and actually air foam or a rigid insulation around all of these piles and pipes and wires and cables. It would take forever, where our material flows like water. And that's really all the major applications I want to talk about from a cellular concrete perspective. This green roof uses, we're invested in another company that produces foam glass, which is a lightweight aggregate, and it's used mainly in the building construction industry for insulated roofs and flooring systems. So this is another application that we would get involved in, also in the infrastructure industry too as well. The next one I want to share is really our webcast that we did at the end of the third quarter, because I think it's important to update everyone on what's happening today and the record results that we're achieving. Okay, let's see, we'll go down here. This was put on by Randy, my CFO, and myself, but he's not with us today. I'm actually in Toronto. And our head office is in Calgary. So this table of content, I'll go over the third quarter highlights, the record-breaking sales that continue, a strong fourth quarter that's expected as well. And of course, it's almost over and it's come to fruition as planned. Safety equipment, we'll talk about that a bit. Our backlog and our sales pipeline growth, $1 million project changes. These are the large projects that we land every year that become a big part of our process. These $1 million project locations, and of course, even with a great 2023, we got a great 2024 ahead of us. And I'll go over the Q3 financial results just quickly. Third quarter highlights, record sales for the quarter and year to date. Margins continue to improve significantly. This is after the supply chain issues that we faced last year, where there's basically a lack of cement right across North America, caused huge increases in prices, and of course, it significantly affected our margins as well. Even with all this work going on and all the equipment and staff all over North America, no significant safety issues, and the staff are meeting the challenge. And it's been a big challenge this year. We've grown quite significantly. Balance of 2023 remains strong. We've had 30.2 million in new contracts secured since the last quarter. And of course, we've got a strong backlog and pipeline that continues to grow. Record-breaking sales, quarterly sales were 20.3 million last quarter, which is a record. All-time 9-month sales record of 33.7 million, which was a record annual sales too, because last year's record sales of 29 million for the entire year 2022. We've already beaten that. And of course, we've had 51.9 million in contracts landed since the beginning of the year. So everything has been going Cematrix's way in 2023. Strong fourth quarter is expected, and I guess it's mostly over right now. You always worry with the weather factors, you know, if your projects are actually going to go ahead as intended, but we've had a great fourth quarter. It probably won't be as good as the third quarter, but it's still going to be a strong quarter. 9 of the 15 projects that were over $1 million that we had going this year were scheduled in whole or in part during that quarter. And when the balance of the year just continues to get stronger. Safety and priority. So again, we've got people all over the country, particularly in the third and the fourth quarter. We're running sometimes 8 to 10 projects a day at different locations. So when you've got all of your people working 8 to 10 to 12 hours a day, sometimes 6 to 7 days a week, you always worry about not only the equipment breaking down, but also, more importantly, that our staff is staying safe. And we're happy to report that in both cases, or both instances, things are going very well, and our staff has been very safe during this entire period. And it's a testament to the focus that we have in safety at Cematrix. Backlog sales pipeline remains strong. You know, you keep thinking, if you put $20.3 million in the ground, you think your backlog would drop down. It just continues to grow. So it stayed really around that $100 million range all year, even though we've already put in over 4 million in sales this year, which is a testament to the organic growth, you know, right across North America. And then our sales pipeline, where we draw projects on, it still remains at $425 million plus at this point in time. $1 million projects. So we announced in the spring that we had 15 of these projects that were going forward this year that totaled approximately $75 million in projects, of which 35 to 40 million was going to go ahead this year. And they've all been going ahead as planned, except for the big North Carolina project that actually got delayed again and won't start till the spring of 2024, which is very interesting because 13 million of that project was in our forecast for 2023, and it was completely replaced with new projects during the year, which is another testament to the growth, the organic growth in the market. These projects are right across North America, and you can see that we're basically, our offices are in Calgary, Bellingham, Washington, and Chicago, Illinois. But basically, all of our projects are poured on site, and we're completely mobile. So sometimes we can be pouring in the deep south in the US, and 3 days later be pouring somewhere in Canada. And that's the advantage of being completely mobile and being able to move our equipment quickly at low cost. Important to mention that we're hitting 2024 running as well. I mentioned the $75 million in large projects. Well, only less than 40 million of that is going this year. So 40 million actually relates to the next year and the year after that. That continues to grow every day. And we expect, again, to have a good growth in sales next year. But I will mention that 2023 has kind of been an unusual year because we've had all this pent-up demand and backlog that kept getting delayed during COVID and then with the supply chain issues. So this year's sales are really ahead of where we expected to be, actually quite significantly ahead of where we expected to be. But again, it's just a testament of that. All those sales that we expected to happen in the past are now happening right now, and they continue to go into the ground. Just, Q3 financials, I won't go through. That's kind of hard to read in the screen, but just go through the highlights here. 20.4 million in Q3 versus 11.6 million last year, 76% increase. $33.7 million year to date versus 20.7. That's a 63% increase in last year. Operating income, $2.5 million of $2.2 million improvement in the quarter, $0.4 million year to date. That's a $3.9 million improvement over last year. And again, we'll see good results for the fourth quarter as well. Adjusted EBITDA, $3.2 million for the quarter versus a negative 2.3 or 0.9 million the year before. So a $2.3 million improvement. And year to date, $2.1 million. It was a negative 1.9 million today in the third quarter last year. Cash on hand continues to remain strong. Of course, a lot of it has been used this year to support working capital. In fact, I think our working capital is over $10 million right now and continues to grow as we have a strong fourth quarter. But all of that working capital will flow into the bank in January and February as we go through our off-season type basis. And then important to talk about the revenue as well. And you can see, how we are a seasonal business. The third quarter is always our strongest quarter. Fourth quarter is our second strongest quarter. We expect this fourth quarter to be a lot stronger this year, but still it won't be the same strength as we had in Q3, but it still will be a good quarter, which will result in us being positive income this year, positive cash flow, and positive EBITDA, which is a great change from the past 2 or 3 years going through COVID and the supply chain issues. And it's also important to note that our capital structure is very clean now and that we've paid down our debt quite significantly. So shares, $135 million issued and outstanding, less than 140 million fully diluted. If you look at the top right-hand quarter, basically we wound our debt down to almost zero. We have a couple of $1 million left related to the 2 acquisitions we did in the US, but that's all timed out and would be paid out in the next couple of years. So essentially, Cematrix has had a great year, is in a very good position from a balance sheet perspective to move forward and grow. And although our focus right now is on execution, we intend to get back into the acquisition market within a year or 2 as we basically put 2 strong years behind us. So, Paul, I hope that's a good overall summary for the group, and I'm open to questions.
Perfect. No, thanks so much, Jeff. I want to remind everybody that's listening, if you've got a question you'd like me to ask Jeff, please use the chat function, and I'll fire that question off. You answered a bunch of the questions that I prepared here, including the sort of the seasonality. So it's good to know that sort of Q3, Q4, typically your strongest quarters. But it sounds like, the full year looks like it's going to be pretty strong going forward. How do you envision sort of the next years after that? What are we still sort of in the growth phase where we're still out there instructing or educating people about this product, or is it now significantly more entrenched and we're sort of seeing a steadier uptake? How can you describe kind of the next few years?
Very good question, Paul. And there's 2 different markets here, the Canada and the US. So the US is about 10 years ahead of the Canadian market. But there's still many states that don't use cellular concrete yet. So there's still significant growth opportunity within the US. And even in those states that are using cellular concrete more and more, they're not using it for all the applications they could. So we see growth in even the ones that are using cellular concrete in quite a large fashion now. In Canada, really early stage. So Western Canada, we've done some significant development in the cellular concrete markets, but basically Eastern Canada is almost untouched. And that's where, if you know anything about Canada, that's where most of our population is. So that's where most of the infrastructure is being built. So we see strong growth coming from Eastern Canada eventually too as well. So over the next few years, it certainly probably won't be as strong as 2023 has been, but we're still expecting strong growth for the foreseeable future, probably up to 5 years, maybe longer, because there's still lots of organic growth room in replacing legacy products that they're still using for other applications.
Mm-hmm. And I know in the past I've asked this question, but might as well ask it again. Like who sort of where's the decision made to use this product rather than sort of legacy products? Who's the person? Is it the architect? Is it the owner? The sort of like I just don't even know who do you have to go and sell?
Well, good question again, but mostly it's who we sell to is the geotechnical engineers.
Mm-hmm.
And it's the geotechnical engineers who design the products to be used into projects. And then they go into tenders. The tenders go out as part of a tender document, and the general contractors bid on those projects and then call us for our price, basically. So, as the market becomes more mature, it's just being specified regularly. So we don't have to spend as much time out there educating the engineering public, but we still do that every day. And we do that by way of lunch and learns, by way of completing successful projects, webcasts like this that we do from a engineering and product perspective, so not financial. And those are very helpful. And just getting out to the public again and selling the Cematrix and cellular concrete opportunity.
Mm-hmm. Now you touched on some of the challenges you faced during the pandemic. I mean, just the ability to get concrete was next to impossible. We're now past the hopefully past the pandemic and not have to deal with that again. But what other challenges do you see you're facing as a business, and how do you sort of deal with them?
We're in great shape from an equipment perspective. Mm-hmm. So we have, and I've mentioned in the past, we have over 200 million US worth of seasonally adjusted capacity in our equipment. We don't have the people to do that amount of sales, but still we're in a fantastic position growth-wise. And how we protect ourselves from the people side is we cross-train all of our operations people. So if more work comes along, we're able to break a 4 to 5 man crew into 2 crews, and then hire some skilled labor and train them, and then become a lot more number of crews out there in the workforce. And that's what we did essentially this fall. We've been so busy and having so many projects going on, we've been splitting those crew down and hiring more people on the operations side. So that's less of a risk, but it's still a concern to me, and a big concern. And if I don't sleep at night, it's probably because I'm worried about our staff. We've just been so busy and so many hours. Some of our staff haven't been home for a few months to see their family. So it's tough on them, but they've been doing a fantastic job. And I just want to thank them right now again for all the work that they do. Cash wise, we're in a great position. Balance sheet wise, we're in a great position. We don't have to worry about cash, worry about raising money at this time. So, and typically, if you're in a position like that now, you're in a good position from a market perspective, and we're happy to be there. So not many things worrying me today.
Gotcha. Well, that's good. Good. Now you mentioned M&A. I know you did this, the acquisition of the company. I think it was out of Bellingham, if I remember correctly, a little while ago. But when you're looking at potential acquisitions, what actually are you looking for? Is it a geographical fit? Is it a technology? Is it people? What can you tell us?
Well, right now, and we've been focused on this for a while, is we're looking at regional expansion into the southern US, and that could include acquisitions. Now, the acquisitions could be in the same or similar field. And when I say a similar field, there could be a company that's in the infrastructure materials business, but they're not in the cellular concrete business, but they would be complementary to our other businesses. So they may do other types of grouting or heavy grouting or things like that we could actually utilize in our other businesses and use that technology to share in Canada, for example. So we're looking at companies with complementary products. Preferably, they would be environmentally friendly, more of a green product, because we really believe that the world, particularly North America, is moving towards more greener construction, and so that is important to us. Cellular concrete in itself is greener than most of the products that we replace in most circumstances, but not all the time. the good thing about our product is it's made from cement, which creates a lot of CO2 when you're manufacturing cement, but the cement companies are doing a great job to get down to zero emissions. So they expect to, by 2035, down to be net zero, which is fantastic because that just makes our product even more environmentally friendly. And so that's a benefit to us. So those are the kind of things that we look at, Paul. Again, companies in our space, and there's not a lot of them, or companies that produce same or similar products that we can market throughout the balance of our company.
Perfect. Jeff, I got a couple questions that have come in, so I'm going to ask these, and then we'll finish up with a couple of my last questions. Now, as far as I know, you're only operating in North America. Is that correct?
This is true.
Okay. The question here is, there's been several difficulties with poor concrete installations in schools and large buildings in the UK. Would your product solve some of these problems, and do you operate in the UK? So that's we know the answer to the second part of the question.
Yeah, we don't operate in the UK, but we do have an affiliate there. And I'm not sure of the problems that they're referring to on schools, but certainly cellular concrete has become a very strong solution in the UK market. So our partner up there, which is, we don't own them, but we trade technologies and use some of their knowledge and technologies as well, and they're doing very well in the market in the UK.
Perfect. Okay, and then Daniel asked, how long would it take to process the current backlog and turn it into revenues?
Well, we could do it all in 1 year if they were all scheduled to do in 1 year, but the current backlog of $100 million is really mostly focused on, say 50% of that potentially next year, up towards 50%, the balance coming the year after.
Gotcha.
Generally, the backlog, just so you know, Paul, is, except for tunnels, is usually done within 1 to 2 years.
Okay. Okay. Perfect.
Tunnels can be a little bit longer.
Yeah. Yeah. I got you. How, like, I mean, these tend to be big infrastructure projects. How much in advance do you know about these projects? And what sort of this time to first discussion to sort of end of project? What's the typical time frame?
That's a good question. Again, there's two types.
Yeah.
One that is, maybe in design, like as a huge infrastructure project, or even a facility project that may be in the works for 3 to 4 to 5 years, goes through all the design planning, and then some of them even get passed on to PP3 or P3 type situations, where then it gets redesigned by the P3 companies that take it over. So they can be 3 to 5 years, so very large projects, and typically they'll go in stages. But most of the projects that we handle come out on an annual basis. All the states, municipalities, and even the federal governments have an annual allocation of infrastructure type projects that they're going to do. So they'll be designed over the late fall and early winter. They'll come out to tender in the spring, and they'll be done that year. So there's basically those two types of projects.
Gotcha. So, and so another question that's come in is in regards to the tenders. What's your closing rate on the tenders when you're out there putting your tenders in on these contracts?
It's getting stronger all the time. In Canada, we do measure it, and it's easier for us to measure because we're one of the only suppliers in Canada, so we can measure the growth or the acceptance rate. And generally, it's getting up, to 40 to 50%. But we don't have the volume of projects that you do in the U.S. Most of our work, or 85% of our sales, are in the U.S. for two reasons. One, it's a much larger market, and second, as mentioned earlier, their market is 10 years ahead of ours. So we're doing a lot of ground development in Canada still, still out doing lunch and learns on a regular basis. So hopefully that answers your question.
And is there a sweet spot? I mean, you mentioned tunnels, you mentioned bridges. What's your sweet spot? What, if we were to all of a sudden see a whole bunch of announcements of bridges or tunnels being made, is that a good sign for you, or is there another part of the business that is just as good?
No, that's a very good sign. Those 5 applications that I went went over at the start. I went over them because those are the ones that are growing dramatically. Those are the big ones. The tunnels, we've had, our largest contract is a tunnel one that was 32 million Canadian that will start this year, or at the end of next year, I should say. And then the largest bridge abutment projects is North Carolina one that's 22 million Canadian, right? So I can remember 10 years ago where the largest project was a couple $100,000. So we've come a long way since then. Now we still pour projects that are, 5 cubic meters, 1 cubic meter. In order to develop the market, you've got cities and municipalities that are requiring it for everything, from grouting a small pipe to a small shell utility insulation fill to, protecting pipes and abandonments and things like that. So it's a wide range of types of work that we do right across North America.
Gotcha. So as you said earlier, I mean, the company's now starting to cash flow quite nicely. You've been paying down debt. It's almost all paid off now. The question I've got here is, what's the strategy going forward in terms of that future cash? Where are you going to allocate that cash?
Well, as we said a year ago, our strategic focus will be for 2023 and 2024 is to continue to grow the market, but to put the product in place, meaning execute all of the sales that we've landed. And by doing that, we're going to start to grow quite significantly from a sales perspective and from an income and cash flow perspective. Once we're there, we feel that we'll be in a position then to start utilize the cash for other things like acquisitions, maybe some stock buyback. There's all kinds of opportunity, but in the short term, our focus is on execution. We need to start generating our own cash solidly, which we're doing right now, and continue that for the foreseeable future. And that will enable our share price to go up, and that will enable us to go back to the acquisition front. We'll have strong cash, a good share price to back up our acquisitions, and people will be interested in being acquired by us as well, because we'll be in a very good position to do that. Yeah,
no, good answer. You mentioned the seasonality component. Is there anything you can do to smooth out that seasonality? If I'd imagine, it really depends on where you're working. Parts of the U.S. that don't have the same winter issues as we do in Canada. And I think you did mention you're looking at more business in the south, sort of southern U.S. Is that how you look to smooth out seasonality, or do you care?
Well, we do care. And so there's two ways to do that. Exactly. You mentioned where I mentioned earlier, and you alluded to that, is the regional expansion in the southern U.S. So we're starting to do more and more projects down in the southern U.S. And as we grow that business, we'll probably establish a permanent location, probably in the Houston area or somewhere down in the south. Right now, we're already doing projects there. In fact, we did a large wharf backfill project last year, and we're in the final stages of landing another one for this year too as well. So that will help with the seasonality. Tunnel projects can be done any time of year, so we continue to grow that business. And we're also, again, as mentioned earlier, looking at acquisitions in the southern U.S. as well to help solve that, not solve it completely, but reduce the effect of the seasonality on our business.
Fantastic. Look, as we look forward to your business, what do you think are the key metrics or catalysts maybe that we need to really focus on to understand that you guys are sort of continuing to go in the right direction?
Yeah, we talked about this a little bit earlier, but the thing that hurt us last year, even though we had record sales, was our margins got killed by that cement shortage that was right across North America. And that cement shortage caused cement prices to jump by over 30%, which normally wouldn't be a problem for us because we are protected under agreements to buy. We protect ourselves at the time that the job is let. Unfortunately, the people that we had protection from ran out of cement. So we had to buy it from somebody else at 30%, so at 30% higher. So what's the important metrics is look at the margins. Now, not the margins at the start of the year, because we're high fixed costs. So you see our margins are sometimes even negative in the first quarter. But if you look at the third quarter, margins significantly ahead of last year. and the quarter from the year before, and you'll see that again in the fourth quarter. So margins will get up in the 25 to 30% range. Sales will start going in excess of 50 million, and we continue to grow organically like this. We should be 100 million within a few years. And so watch the sales, watch the new contracts coming out. We try to keep our audience up to date. Going to continue to do webcasts on a quarterly basis, keep everybody up to date. So you're going to see continued growth and continued better financial metrics as we move along and grow this business.
And Jeff, like what's the end game here? What does this thing look like, you know, out in the future? Are you selling this business? Are you going to continue to sort of consolidate? Where do you see it?
Well, we're not trying to sell it now, but you know, somebody may come along and buy us. Somebody always says, well, "Why doesn't Lafarge buy you? You're one of your strategic partners," and that may happen someday. You know, you can't predict those things. But what we need to do as a board of directors and a senior management group is just increase the value. And continue to increase the value of the business, and that's going to provide opportunities for us, whether it's a sale to somebody else that's going to pay our shareholders a good price for their shares, or it's just continuing to develop value and cash, and then maybe getting into a dividend stream. It's kind of hard to project that right now. What we need to do again is execute, and if we execute, generate the cash that we need, we'll put ourselves in a position to be able to decide that path a little bit better in the future.
Perfect answer. As we wrap up here, Jeff, any final words, any key takeaways? What's the key message you want to make sure everybody walks away with today?
Well, I just want to thank all of our shareholders to date and those that are looking at supporting us. If it wasn't for our shareholders and our staff, we wouldn't be where we are today. And you know, somebody said it's like an overnight success, an overnight 20-year success, right? So. And that's the way it is. We've held on. Our shareholders have supported us all the way, and it's finally being realized, and it's going to continue to grow. So even the new shareholders that are coming in are going to experience some good, strong growth. And as we believe right now, our stock is still quite significantly undervalued, and still a good opportunity for shareholders to get in and look at a good, strong return in the very short term and long term as well.
Fantastic. Well, listen, Jeff, congratulations on an outstanding Q3. I think it really woke up the market, and a lot of investors now are talking about you guys. So well done there. And listen, we always appreciate it when you join us and tag along for a few minutes and get us up to speed. So we look forward to the next time we get a chance to chat like this.
Paul, I appreciate it. It was good to talk to you again and your audience, and look forward to our next discussion.
Thank you so much.
Have a Merry Christmas.
Merry Christmas to you too. Thank you so much, Jeff.
Thank you.